Thanks very much, Shireen. Thank you, Manish. Thank you, Mr. Mistry. Thank you, Mr. Vaidyanathan, for a really insightful discussion. I think, optimism is infectious, right? And I think what we've heard so far is a fair bit of optimism, but it's, of course, not unbridled. It's measured. And I think it's something which spreads. And I think optimism is necessary, not just in stock markets, but, of course, when we're talking about the investment cycle as well. And some of the comments really I think, point to that. So we cannot end this evening, of course, without talking about markets and what to do, right? We've mapped the macros. We've heard from corporates. We've had a nice jugalbandi between market veterans. But I think we'll also now spend some time talking about what to really do. What are the actionable ideas that we can put before you? To do that, I've got three gentlemen, so let me just invite all of them onto the stage. We have Prashant Khemka, who's, of course, going to come up on the stage. Anish Tawakley is Deputy CIO at Equity at ICICI Pro AMC. And Nilesh Shah is Group President and MD at Kotak Asset Management Company. Thank you very much, all of you, for joining us.
I was following your footsteps. I didn't realize it.
Thanks once again. I must say that between the three gentlemen here, they command a firepower, equity firepower, which is doing the rough numbers, some $90 billion US, 90. So that's some serious money that we're talking about. Nilesh bhai, I want to start by asking you the first question. At my home, in my building, in my complex, when I go outside, and I'm assuming that we have lots of, Guju friends here. You're one. I get asked this question a lot of times. क्या लेना चाहिए? मैं आपसे पूछना चाहता हूँ क्या लेना चाहिए? And I know the answer, buy India. So that will not do.
So Prashant bhai, first let me start with a disclosure. Mutual funds are not taking any money from banks. When I receive money, it is by check. When I give money, it is by check. As per RBI's own data of financial flows of household in last 3 years, only about 1 lakh crore has come into equity. Only about 4 lakh crore has come into mutual funds, including debt mutual funds. About 9 lakh crore has gone into currency notes. Mr. Vaidyanathan, you have to fight with the currency notes. From your branches, you are disbursing 9 lakh crore worth of currency notes. This is depreciating asset, Prashant bhai. And yet, bankers keep on giving 9 lakh crore worth of currency notes to people. They are at 31 lakh crore of रिटेल फाइनेंशियल हाउस होल्ड. हम लोग तो 4 लाख करोड़ है. कोई कंपटीशन ही नहीं है हमारी. हम तो वो करेंसी नोट वाले से लड़ रहे हैं. Hopefully this debate is settled. Thank you.
I'm sure Mr. Vaidyanathan will have a question. We'll open up the floor for that. But to that question, Nilesh bhai.
So now, yeah. Prashant bhai, we have reached a level where my cousins are telling me, Nilesh bhai, aa lai lo, kale vadhi jase. And it actually goes up. So I am at the receiving end, and I'm sure in audience everyone has made far more money than my funds have made. So I'll take their advice.
But that is a dangerous one. We often hear, right, the old story, when the panwala tells you what to buy.
So as Vaidi mentioned that SME should have lower taxes, Vaidi, you must have told this to SME exchange IPOs. They are already discounting it.
Okay, I'll come back to you, Nilesh, in just a bit. But Anish, what's just that question? I mean, what to do in the market scenario, which has done so well. The run-up has been phenomenal. We are basically making new all-time highs. The corrections and the falls which come, they're short-lived, they're sharp. Not sharp, actually, they're shallow. And very, very short-lived. 2-3 days, 2-3% of the market moves back up once again. So what is the thing to do?
So the way I'd frame it is like in the markets, you get returns from 2 sources. Either multiple expansion, the PE multiple expands, or you get earnings growth, right? I don't think anybody would argue at this point that multiples are cheap and multiples should expand further. They might, but I wouldn't bank on that, right? So really what you have to play for is earnings growth, right? And earnings growth then depends on what happens in the economy, right? Now, I'm of the view, and I think I share that with everybody else, that the economy is likely to do well over the next 2 to 3 years. So if the economy does well over the next 2 to 3 years, the sectors that will do well, right, the increment normally comes from the cyclical sectors, right, the domestic cyclicals. So these would be things like automobiles, financial services, cement, and capital goods. I know they've done well already, but if there is likely to be a positive earnings surprise, I would still play these sectors.
Anish, I mean,
I'll make one more point.
Yes,
Between
please.
large bid and small cap, our view is that risk-return trade-off is clearly in favor of large caps at this point.
Nilesh bhai, you'll agree with that? You've been sort of advising caution for the last 2 quarters at least. We had a correction, but very short-lived one.
So we have been way early and thereafter markets have risen a lot. But I think what is worth avoiding also is important. The low floating stock counters are today trading at crazy valuations. And it will make sense to stay away from there. It might give you short-term pain because momentum can still continue to ride. But in the long term, this will benefit you. So just stay away from low floating stock, high expensive valuation counters.
But do you agree with Anish's point, the skew has to be large caps? I mean,
undoubtedly, yes. Right now, the risk-return trade-off is more towards large caps and larger mid-caps.
Prashant, come in there. You have a sort of global, you manage global money at Goldman Sachs. You've $8 billion of assets under management now. A lot of it is foreign money. What is the perspective? I mean, and you're getting money. You're still getting money. So where do you deploy?
So we remain fully invested at all times. Even today, cash in the portfolio might be 10, 20 basis points, not even a percentage point. Valuations, if you look at relative to India historically, we are not in the camp that they are, forget outlier, but last I saw, it is in line with the last 10-year average at the market aggregate level, at least as of month end, and I don't think March in particular, Feb, and I'm talking about, I don't think March in particular would have. And so I'll give you precise number from what I recollect. It's at 20.7 times is the last 10-year average forward 12 months, and we are at 20.5 times. So if anything, a smidgen below. There are pockets. Nowadays, obviously froth is oft mentioned word. So there are pockets of froth in small caps. But at an aggregate level, neither in large, nor in mid, nor in small, we never make that call that small is better. My point usually is that it's hard enough to identify a undervalued stock. To be able to talk about in aggregate entire segment of the market being overvalued, we generally don't make those forecasts, and we remain, as always, the opportunity, stock selection opportunities are often the best in the most inefficient segments of the market. They always tend to be mid and small, so that overweight, over allocation continues to be in mid and small relative to large at this time.
So that's a bit of a slight difference, right, compared to how you are allocating money right now. I'll come to specifics and what sectors make the most sense, etc. But, we heard Manish talk about, and Ramdevji spoke about 5 trillion, 10 trillion. Is there a need to pull back a little bit? Because sometimes we are looking at, I think Manish made that point that, when you look top down, you can make a bearish case, but you then study individual businesses and you see great opportunity, right? So it's not maybe a like-to-like analogy, but is there a case to pull back a little bit? And I mean, if we're really at that moment where the decadal dividend, so as to speak, is to come our way, does it make sense to pull back and look at the bigger picture? Or will that be getting carried away? Nilesh bhai.
So let me give you answer in a philosophical way, and Anish and Prashant can give on a more financial way. Do you believe there is a God upstairs? I mean, you can see hardly anyone nodded. Now I'll prove to them God exists and he or she is an Indian. So let's look at oil prices. Israel-Hamas war, oil production cut by Saudi and Russia. Russia-Ukraine war, Red Sea disturbance. Oil should have been in triple digit. There is God which said Tathastu, it is in still double digit. US Fed 3 months ago was saying higher for longer. God said Tathastu, now Fed chairman is saying I'll start cutting rates. Karnataka election, we were worried about government. If I make a statement here, ab ki bar, people will say, bhai vote karna, 400 par. Vote on account, we were worried about it will be freebies laced election vote on account. It was the shortest speech. I normally go to CNBC Awaz every budget time. We were villa for 1 hour. You look at monsoon, last year was below average. This year God said Tathastu, it is becoming with La Nina rather than El Nino, so it should be good enough. Look at the GDP growth number. We started at 6, we are ending the year at 8. We do go wrong on such estimates, but not by 25% margin. Do you believe there is God upstairs and who is an Indian? If yes, then play like Sunil Narayan played yesterday.
But you're making my point, Nilesh bhai. So then, I mean, then what I'm saying is correct. You need to pull back a little bit and not get fixated on.
Yesterday you didn't watch Sunil Narayan betting. Uske tarah betting karo because upar wala sambhal lega.
Is that in jest or is that serious?
No, I have many other points, but let them give the finer real points.
Anish, I mean, to that point, I mean, you know, you look at valuations, you look at not the near term, but the next 1 year, 2 year. That's what we do. We look at earnings forecast, maximum 2 years out. But is there any case, and can you invest that way by pulling back a little bit and sort of riding on some of these mega trends, mega themes? Valuations have always been rich, and maybe they're a little richer now. But so what, Anish?
See, I actually don't take very strong 10-year views. There's always a very wide range of outcomes possible. I believe Indian economy has great potential to do really well, but we should evaluate in 2 or 3 year periods, right? I think there will always be cycles, there will be periods of booms, and there will be slumps in those 10 years. At this point, though, over the next 2 or 3 year outlook, at least if I look at the economy, it looks very robust, right? And there are, actually, I track 4 variables in the economy. One is cement consumption, second is automobile demand, third is home sales, and fourth is power demand. Right? Frankly, these are the only 4 variables in which you get hard, reliable numbers. Everything else, rural wages, etc., the numbers are, you can make what you want to make of them, right? So from a cyclical perspective, all these 4 numbers are strong, right? If I look back, you know, over last couple of decades, there have been periods where these numbers have looked strong in the past, but what went wrong, right? Home building is very, very critical. And if you see this cycle, this pickup started when real estate market unfroze and activity started picking up. If I start seeing that house prices are appreciating, but house volumes are not coming through, which is what happened in 2008, right? People were very happy that house prices were appreciating, but actually buildings were not being completed, right? Then I would get worried, right? At this point, what I'm seeing is very strong home building activity with volumes. There are price increases. I don't necessarily like that, but at least volumes are coming through. If I see, look, cement capacity utilization has reached at a peak, or if power capacity is now fully utilized, then I would say, look, the cycle has peaked. I'm not saying the long-term outlook has changed, but the cycle has peaked. So, but at this point, I don't think we're at the peak of the economic cycle.
There's a lot of new supply also coming, right? Samiran was earlier making that point.
Which is good. So that means you'll have a longer
runway.
Yeah. If you don't have capacity coming on, that's when demand exceeds capacity.
Correct.
And you get the risk.
Prices go up, but volumes, units don't go up.
Exactly.
And as you said, real estate is a crucial cycle, and we asked this to developers. What year are we in the cycle? I mean, if it's a 7 or 8 year cycle, are we in year 2, year 3, year 4? What's your sense as an investor?
Look, real estate, I give this statistic about India and China. A lot of people talk about manufacturing in China. Actually, the bigger story was actually urbanization and home building. If you go back to 1981, the proportion of people in urban areas in India was slightly actually higher than China.
Right.
If you look today, the total population is the same. There are 900 million in urban areas, we're 900 million in rural areas, right? So what they've done really, really well is urbanize and home build. Now, I can't actually say how long this cycle will last. right? It depends on whether urban infrastructure is created. If urban infrastructure is created, you could have a very long cycle, right? So I wouldn't necessarily say it's 7 years. It might be shorter, it might be longer, right? I think you have to play it on a 2 or 3 year basis, like on an ongoing basis. You have to keep reevaluating.
Got it. Prashant, any sense in taking slightly longer view here?
Yeah, I would say yes, absolutely. And we've been emphasizing quite a bit on growth and how it, stacks up to the valuations. But very important, I believe more important than growth, what the market values is governance. In any sector, anywhere in the world, you just take, and I'll talk about it more at a stock-specific level as well as country level, because both are equally important in India's case. Let's take, within this panel and the prior panel, we've had 4 panelists from banks. So let's take banking as a sector. Yeah? Where else in the world, I haven't seen, and I've invested in every country almost over the last 20 years, starting from US, small caps, large caps, and EM, we still manage EM currently. I scour EM landscape across the world from Korea to Mexico. Nowhere do you find governance and transparency in banking sector that you have in India. Okay. Within India also, Nilesh Bhai's bank has not generated in the last 20 years the fastest growth nor the highest ROE, right? But has consistently traded at the top of the pack by multiple. Why is that the case? Why not the fastest growing financials have been at the highest multiple? It's not the growth that determines the multiple, it's the governance that determines the multiple. And ICICI is up there with multiple as well, yeah? So that's at corporate level, and banking is the largest sector, 25 to 30%. It has a huge bearing on the multiple of the entire index. Just simple math, in China also 25% is banking. They all trade at 0.5 multiple or 5 PE multiple. Here in India, they deservedly trade at 20 multiple. If in China there was a bank as transparent and well-governed as an Indian bank, it will trade at 40 multiple because there's nothing else to invest in the banking sector over that field. But 15 multiple points difference on PE, multiply that by, let's take 30% of the benchmark. That itself contributes 4.5 multiple point difference between India and China. We're just talking about one sector. Now this is at stock or sector level. At country level also, we've done considerable research, our team. Going back 25 years, democracies have always traded at a substantial premium to authoritarian regimes. And when you think a little deeper, it's because in well-functioning democracies like in India, there's separation of powers, there's judiciary, and there are proper property rights, contractual rights that get respected. When I travel to, UK, and I make this point, they talk about Vodafone case. I'm like, okay, what happened with Vodafone case? They weren't happy with the position that the government of India took. They sued the government of India in India, right? Without any fear of vindictive behavior from the government. Can they, how many emerging markets can they do that? Can they sue the Chinese government in China? I won't name each country, but yeah, the ability to sue the government in their own country and yet be able to do business without the fear of existential fear commands a huge premium. And then that is what is the #1 reason I believe India trades at a substantial premium compared to emerging markets. Growth is certainly the other factor. But #1 reason is governance at the national level. And second is also the governance at the sector by sector, company by company, if you look at, is very strong governance.
Thanks, Prashant. That's a very well-rounded argument that you make. One sector or one area that all three of you are very bullish on is domestic cyclicals, industrials, capital goods, that part of the segment. And that's largely over the last many years been driven by government spending. And we just had a session talking about it, return to the animal spirits, the private sector making a big comeback. But while we wait for that to happen, we are in election season now. We'll get manifestos very shortly, and maybe they'll be well detailed with what the next agenda, etc., is going to be. Nilesh Bhai, but do you think that is that is the one segment. Infrastructure build out in a big way, manufacturing, import substitution, that continues to remain the big area of opportunity led by government spending. What's your view?
So one, this is our golden opportunity to capture China plus one. In 1980, we were equivalent to China. Today, they are 6 times bigger than us. What we lost, we should recapture. One, there are 2 areas which makes India's manufacturing uncompetitive. One, logistics cost, second, power cost, apart from many other things. When we had PSU market cap of 15 lakh crore and a deficit of about 3.5 to 4%, our divestment program was about 65,000 crore. Today, when PSU market cap is 50 lakh crore and fiscal deficit is about 6%, the divestment program is 50,000 crore. Undoubtedly, there is a room to increase divestment. We should use that divestment additional receipts to ensure that we become productive or competitive on power cost and logistics cost. Today, industrial power carries the subsidy of agriculture power. I hope and pray that some political party will put in their manifesto that we will use divestment to ensure that industrial power is free of agriculture power subsidy. The second is the commercial freight, which carries the subsidy of passenger fares. The last railway minister which proposed increase in passenger fare hike, he was sacked by his own party, and thereafter no railway minister ever attempted that. Again, use divestment proceeds to take out subsidy of passenger fare from commercial freight. You take this over a period of time. You can't do it in 1 year, understand that. But over a period of time, and let Indian manufacturing become competitive to the world, go and capture China plus one. In 1 minute, I'll say what we have missed and what we should not miss. Samsung came to India long before they went to Vietnam. They are today India's largest consumer durable company. They have done very well over here. They run India, world's largest single location mobile handset manufacturing plant in Noida. But they went to Vietnam much later after coming to India. They make in Vietnam to sell all over the world. What's their turnover in Vietnam? About 6 lakh crore. It's 6 times higher than India. Is Vietnam 6 times bigger than India? No, it's 1/12 size of India. They contribute about 28% of GDP in Vietnam. Imagine if we had not allowed Samsung to go to Vietnam and kept them in India by providing all incentives and making our manufacturing competitive, where we would have been. We should not let that ever happen.
Some of that enabling sort of environment is getting built now, and I think many companies like Apple, etc., want to make a lot more here in India. Anish, same question to you with regards to looking ahead in the, opinion polls, etc., all suggest that the BJP, the NDA, will come back strongly. If that is so, do you think infrastructure, build out and make in India, those will be the big buzzwords once again?
So I'll put it this way. We put a lot of emphasis on structural reform. Actually, what has worked really well over the last 10 years is actually the cyclical management of the economy. What do I mean by that? When the private sector was not spending, when the economy was in a slump, that's the time when the government should step in and spend. Right? Fiscal policy should be counter-cyclical. Now, when the private sector has started spending, and I'm not just talking, I'll come to what parts of it are spending, but if you see cement demand is good, automobile sector is picking up, the government needs to scale back its spending, right? So fiscal policy should also be counter-cyclical. And what I really am happy to see, right, is that even though we are at this stage in the political cycle, fiscal expenditure has not gone out of control. And it's actually very tempting to do that, because when the economy picks up, your tax revenues grow, and you feel, oh, you are entitled to spend. But actually, when the economy picks up, the government should be cutting spending. So I would not want a big spending boost from the government at this stage. Infrastructure, urban infrastructure is important. That should get built. If urban infrastructure is built, home building will happen. People will build homes, right? And the investment cycle will pick up once people build homes. The only one point I'd make, right, there is no inherent merit in exports. You ultimately need exports because to pay for your imports, right? There's no inherent merit in them, right? And I actually don't think Indian manufacturing has done badly. If you look at pharmaceuticals, 1/3 of the drugs consumed in the US are made in India. We export automobiles, right? So the point I'm making is the external account is in balance. We want to attract capital into the country, which by definition means we will run a current account deficit. That's mathematical, right? Once we run a current account deficit, we'll be exporting some stuff, we'll be importing some stuff. We are very good at services, so we export services and we import some manufactured goods. It's not the end of the world. I don't worry about that. Manufacturing will grow if house building grows. If people build houses, somebody was talking about the statistics of air conditioners. Yeah, but you need houses before you can have air conditioners.
You're saying a push towards urban
Home
infrastructure
will drive manufacturing.
Okay, will drive.
Urban infrastructure will drive home building, which in turn will drive manufacturing because there will be domestic demand.
And that is, of course, a huge, long value chain, right?
Exactly.
Consumer durables, of course, as well.
Yeah.
In that chain.
Absolutely. Right? If you, today, you have cars and you have automobiles produced in India because those are like cars, pharmaceuticals, these are things that don't depend on the size of your house. Right? You park your car, you park your two-wheeler outside the house. Everything else depends on the size of your house. How many clothes you can consume, how many shoes you can buy, depends on the size of your house. So if you get urbanization right, if you get home building right, manufacturing will follow. People will build if there is demand for it.
Right.
Is my simple point.
Prashant, very briefly, same question to you. What's going to be the agenda and the investment implication then?
I think I agree that the focus on, it's reasonable to expect the focus on industrialization and infrastructure build out would continue. I would just add that over the last 5-10 years that we've seen this pick up has been aided by the improvement in soft infrastructure as well. So what I mean by that is ease of doing business. We went from 142nd to 62 the last time that was published, and maybe by now we are something like 25, 35 or something. But we should continue, relentlessly on that front. We would not accept to be 25th best cricket playing country. And with same kind of, attachment with ease of doing business, we should continue on that path. And that is what then enables physical infrastructure build out as well.
Gentlemen, I have a lot more questions, but we're out of time. So thank you all for joining us here on Chasing Alpha. I mean, I dare say for the last couple of years, Alpha has been chasing us. And I just hope that situation continues. Nilesh bhai, Anish, Prashant, thank you very much for joining us with that enlightening chat. Shireen.
Thank you, Prashant.